So we've been spending a lot of time talking about these various financial statements. We've talked about the income statement, the balance sheet. You've probably heard of the statement of retained earnings and the statement of cash flows, but I'm sure you've been wondering, well, how do these things relate to each other? And the further you get into accounting, you'll realize that a lot of things really relates back to the balance sheet. So what I'm going to do right now is I'm going to walk you through and show you the relationships between all of the financial statements. All right, these financial statements are listed in order, the proper order that they do need to be prepared in. We start with the income statement. We then go to the statement of retained earnings. We follow with the balance sheet, and then finally we end with the statement of cash flows. All right, so what I'm going to do is write out the formula for each one, and then we'll walk through what happens after that. All right, so the income statement is revenues minus expenses. That equals net income, and I'm just going to abbreviate net income as NI, just because I have a small board here and I don't have a lot of room. All right, so then we go to the statement of retained earnings. The formula for the statement of retained earnings is going to be beginning retained earnings, and I abbreviate retained earnings as R/E, plus net income minus dividends is going to give us our ending retained earnings amount. Okay? All right, next we go to the balance sheet, which hopefully by now this one has been imprinted into your mind because this is the single most important accounting equation that exists. All right, so we have our assets are equal to our liabilities plus equity. And then the last statement is the statement of cash flows, which is going to be our beginning cash plus operating activities, investing activities, and financing activities, and that's going to give us our ending cash. All right, so hopefully most of that is like a review and you've at least seen it before. If not, then I just gave you the equation, the short and sweet equation to memorize to help you with these financial statements. So now, and when we're talking about how they relate to one another, hopefully you kind of picked up on some of this as we were going through, but we start with the net income. We start with the income statement. We have net income here. Well, net income shows up somewhere else, doesn't it? Yeah, it shows up under the statement of retained earnings. What happens is we calculate this net income here from the income statement, and then we use it to plug it into the statement of retained earnings, okay? We cannot prepare the statement of retained earnings until we have prepared the income statement, okay? Make sense? That's one way to remember how to do it. All right, then from here, we take the beginning retained earnings plus the net income that we just got from the income statement. We subtract any dividends that were paid out to our investors. Then we arrive at the ending retained earnings. So can anybody remember what kind of account is retained earnings? Yeah, hopefully you said equity, right? Hopefully you said equity. If you don't know that, then now you do. This ending retained earnings number is going to feed into the balance sheet because it's going to tell us this is the retained earnings number that will appear on the balance sheet. All right, so in essence, what we did was we started with the income statement. We moved that, we used that to arrive at the ending retained earnings on the statement of retained earnings. And then we use this ending retained earnings number and put it into equity. All right, the statement of cash flow, the relationship with the other statements is a little bit different because what happens here is instead of using a number and actually putting it onto the next sheet, we use the cash, which is in our assets section, and we compare it to the ending cash from the statement of cash flows. They should balance. So so we don't necessarily give the information from one to the other. We just look to make sure that whatever we ended up with as our ending balance for the statement of cash flows, that it balances back to our cash on the balance sheet. All right? And just really quickly, we talked a little bit about, in another video, we talked about how the assets equal liabilities plus equity, how that section works. So let me just erase this really quickly, and I'm going to show you what happens here. So remember, we have our assets equal liabilities plus equity. And remember, this is from the balance sheet. This is a part of the balance sheet. And remember how we drew our little T and we said, okay, this side is going to be our debit side and this side is going to be our credit side, right? Remember that? And remember, we didn't really talk about expenses in being a part of this table yet, expenses and revenues. But if you remember, when we looked at the formula for the statement of retained earnings and the formula for the net income, revenues increases net income, right? Net income increases retained earnings. Therefore, retained earnings is a part of equity, so revenue increases equity. Opposite of that, expenses decrease equity. Therefore, revenue is treated the exact same way as the liabilities and equity. It increases with the credit, it's on the credit side, the right side, and it decreases with the debit. Expenses are going to be opposite. So what's kind of going to happen is expenses are going to be treated like assets. They're going to be treated like assets. Expenses are not an asset. However, they're going to increase with the debit and decrease with the credit. Okay, so you see what just happened there? Revenues increase equity, expenses decrease equity. Because expenses decrease equity, it's treated the opposite. It increases with a debit instead of a credit. All right, so hopefully you have some information that you can take and use from there. If you have any questions, as always, leave me a comment below and feel free to share, like, and whatever else. All right, thanks.